UnitedHealth Group, one of America's biggest health insurers, just lost half its value in a month. A DOJ investigation, a CEO exit, and a flood of bad news. What's going on? I'm diving into the chaos, sharing why I'm buying UNH shares and selling cash secured puts to capitalise on this dip.
There's more downside in store for UNH shares.
And yes, it's been cut in half.
Do we think that this is a bottom after everything we've seen over the course of the last few months?
UnitedHealth Group, ticker UNH, was a Wall Street darling, trading at $625 per share last November. But since early 2025, it's been a bloodbath, down 50% in a month, hitting a 5-year low of $274 per share on May 15th, 2025. Why? A perfect storm of bad news. Let's break down the headlines. On May 15th, the Wall Street Journal dropped a bombshell. The DOJ is investigating UNH for possible Medicare fraud, focusing on its Medicare Advantage for business. This probe, active since last summer, sent shares crashing 13% in a single day. Earlier, on May 13th, CEO Andrew Whitty stepped down for personal reasons, replaced by former CEO Stephen Hemsley. Add to that a 2024 cyber attack and a public backlash after the tragic murder of a UNH executive, and investors are spooked. So, how does a DOJ investigation work? It starts with a complaint, maybe from a whistleblower or audits alleging fraud, like overbilling Medicare. The DOJ's Healthcare Fraud Unit investigates, gathering evidence over months or years. If it finds wrongdoing, it could lead to fines, settlements, or criminal charges. For UNH, the focus is on Medicare Advantage, where insurers get paid to manage seniors' healthcare. Allegations of overbilling could mean billions in penalties, shaking investor confidence. But here's the twist. UNH called the Wall Street Journal's report deeply irresponsible, saying they haven't been notified by the DOJ about any investigation. Some investors and ex-users are crying fake news, arguing the Wall Street Journal lacks concrete evidence, as it admits the allegations are unclear. Others say where there's smoke, there's fire, especially after a civil fraud probe was reported in February. Now, let's talk trading. I am buying UNH shares because the bull case is still strong. Despite the crash, UNH's fundamentals are solid. 10% revenue growth to $317 billion and a 1,037% jump in free cash flow to $4.5 billion. It's trading at just 9x forward free cash flow, dirt cheap for a Dow giant. Analysts are expecting growth into 2026, driven by better cost trends in Medicare Advantage rates. This dip could be an overreaction, offering a rare chance to buy a market leader at a discount. But the bears have a point too. The DOJ probe, even if unconfirmed, could lead to massive fines or reputational damage. UNH is already facing a civil fraud lawsuit, alleging $2.1 billion in overbilling. The CEO exit and guidance withdrawal signal management chaos. X posts highlight panic selling by big funds, with technicals pointing to lower lows near $250 a share. If the DOJ finds evidence, this stock could stay in the doghouse for quite some time. So, what am I doing? I'm buying UNH shares at these beaten down prices, betting on a rebound as the dust settles. I'm also selling cash secured puts at the $250 strike to collect premiums while markets are volatile. If the stock dips below $250, I'm happy to buy more shares at a discount. If it doesn't, I keep the premium. It's a win-win for a stock that I believe in long term. UNH's crash is a wild ride, but I see opportunity in the chaos. Will the DOJ probe fizzle out, or is more pain coming? Drop your thoughts below and hit the subscribe button. Keep trading smart, and I'll see you guys in the next one.